but there is a point of no return when the physical market takes over. And we've seen that happen a couple of times, but it hasn't lasted long enough to really, punch out the silver price. I think that could happen next year. I could see a crash if the Fed continues to maintain a strong posture with interest rates.
Step into the world of silver with David Morgan as he delves into the untold story of 2024, uncovering the catalysts that will drive silver's prominence to new heights. From global economic shifts to technological revolutions, David provides a comprehensive roadmap detailing how silver's role will evolve in the coming year. Join us for an insider's look at the forces shaping the silver market, promising an engaging journey through the potential highs and unexpected turns that await this precious metal.
What went the way I thought it would was the trade I've had on for months, and that was that platinum would outperform palladium. And also I thought that the other white meat, platinum, would outperform silver, and it has. So that went the way I expected. Silver did not do as I expected. I think if you go back and look at my premium service, my paid service, I said once, twice, or thrice that I thought silver would make it above 30 this year, not necessarily make it to 30 and hold it, but at least trade above 30. And that hasn't happened. That's something disappointing. Gold, I think I was pretty close to what I expected. I thought it would go through and pierce through a new high. And it's been close, and the year's not over. There's a possibility it could do it in the last month. But perhaps not. I mean, the seasonality for gold used to be December was a very powerful month for gold. And that went away, I'll say, a decade ago. In fact, for 4 or 5 years, the last day trading was the worst price for gold that entire year. And that happened several years. But anyway, that's how I see it. So I'd say I was 2/3 correct, 1/3 wrong. The silver was disappointing, I think, for all of us, based on how much offtake there was, how much the COMEX was drained, how much came off of the SLV. I mean, all this physical metal moved, and then India buying so much silver here, announcing what they bought here a week or two ago, maybe 3, whatever it's been. And all those factors adding up, and you just say, how the heck could silver be stuck under $25 US? But it is. So we did a few dissertations on platinum. And the reason I chose the spread of platinum long and palladium short was that there's a bit of a misnomer out there, even to the metals heads, that platinum can only be used in diesels and palladium has to be used in gas cars, and that's totally wrong. You can use the platinum group metals in either catalytic converter. So knowing that platinum costs less than palladium at the time I made the trade, and of course palladium is slightly above platinum's price now, but they're almost at par. It was easy based on what I read, what I studied, looking ahead, what the Platinum Guild had said, and that the auto industry is going to use more platinum. And the other fact is that 70% of the platinum comes from South Africa, and they're having very big problems in many areas, politically and economically from an energy standpoint, because they're not getting as much electricity as they need all the time. And most people are not very studied in it, don't care to, and that's fine. But if I'm going to recommend something, I'm going to get all the data I possibly can to make a decision. And then, of course, platinum is mined at extremely high temperatures, extremely deep in the earth. And they've had some issues with the miners not getting paid what they want. So all these factors, and some of them have come to the fore and some haven't yet. So that's what I put on the spread trade. And then looking at the top 10 producers, the top 10 costs, all-in sustaining costs for platinum is like $1,300 an ounce. And we're sitting there at $850, which is when I got in. I do see it both. I think, because it is both money and an essential industrial metal. If you look at what the solar projections are, that's going to take a big whack. And then you see what we already know about the financial system and how fragile it is. I mean, the main thing that kept silver down is that still so much paper out there that covers the people that want to play the market versus the physical market that really should drive the price, which really doesn't because the paper cover ratio is enough. But there is a point of no return when the physical market takes over. And we've seen that happen a couple of times, but it hasn't lasted long enough to really, punch out the silver price. I think that could happen next year because if the institutions come back, that will drive the market. Really, I mean, this sounds conspiratorial and I don't want it to, but the fact is you haven't seen any institutional participation this year in silver, meaning, 2023. And so then I have to ask the question, well, was someone given the word, like don't buy it? Because you go back to 2020 and the institutional investment in silver was like 320 million ounces. We got a pretty good lift in the silver price. So what's different between 2020 and 2023? Well, I'll tell you. What's different is the economy is horrible and there's more need to be in a safe haven than there's ever been. And yet here's 2020 where you had 300 million ounces bought by institutions, 320 million. And this year, I don't know what it is, probably zero. I mean, I'm being a bit facetious here, but it's not been a high demand. But that doesn't mean that somebody somewhere on the institutional side doesn't say, you know what, I don't give a darn what my instructions are. I run a family office. I run a sovereign wealth fund. I listen to Morgan Report. The hell with it. I'm buying silver, and I'm buying a lot of it because Elon Musk just announced he's buying 2 silver mines this year or whatever happened. So I'm still bullish. I know I sound like a broken record, but I have called tops, and I have told people to take profits, and I have that record. 3 times I've said take profits, and those 3 times were really advantageous to taking profits. So I'm not a one-way Charlie that it goes up always. It goes up and down, and I know that. I do. First of all, on the stock market side, I could see a crash if the Fed continues to maintain a strong posture with interest rates. So in other words, they continue to ratchet up and or at least maintain where they are now, which I think is more likely than most. Then you could see a pretty good crash in the equity market, which, by the way, if you take the Magnificent Seven out of it, the stock market is not doing that well. But these powers that be, they know how to play the market and psychologically make everybody feel good by manipulating enough of the top tier stocks to make the averages look good when in reality, if you look at the broad market, it's not that strong. The other thing is they start lowering interest rates and go into this basic free money policy again. We could have a stock market that just takes off. But in a high inflationary environment, if you look at all of them in past or recent times, I mean, you look at like Venezuela or Zimbabwe or, you'll see these magnificent runs up in the stock market. Zimbabwe is an example. And yet what that's doing is it's trying to maintain purchasing power, but it really doesn't. In other words, you get a huge lift in the indexes or in stocks in general, and they do go up in price, but they do not, again, maintain purchasing power. Gold and silver do. You saw that in the Weimar Republic. You got this. So it's possible that if we start with the Federal Reserve of the United States starts lowering interest rates or lowers them quickly or whatever, then you might see this big lift in the stock market. And yet, if you really look at the real true inflation rate, that the market going up 10% is not commensurate with the true inflation rate of, say, 20%. I don't want to see that. That's indicating more of an indication that we're in a currency destruction, a currency crisis where the value of the paper money deteriorates so fast that people would rather buy anything like stocks or peanut butter if you're not in the stock market than hold the currency. And that's a possibility. So either way, I think I'd be right. But the powers that be are so used to manipulating markets and keeping things status quo, that they could control it and that no one gets hurt that bad. And, the Fed put's going to make sure that the stock market doesn't come down too far, too fast, and all these things that are in place. But there's the mother nature of financial markets, and we haven't witnessed it yet. We may in 2020.
As we conclude this fascinating exploration of silver's future with David Morgan, remember that the road ahead for this precious metal holds both promise and intrigue. Stay informed, stay curious, and stay connected to witness firsthand the unfolding narrative of silver's journey in 2024. Thank you for joining us on this insightful adventure, and keep supporting us by liking, sharing, and subscribing to our channel. May your investments shine brightly as the silver market does in the future. See you in the next video.